Hey, MCE crew, ever since the government of Australia took their guns away, took the citizens' guns away, Australia has become, for the powers that be, a little proving ground, a little laboratory for whatever little, dictatorial and New World Order, economic or otherwise plans that these guys, IMF, World Economic Forum, have up their sleeve. They try it out on the Australians first because the Australians now have no way to genuflect toward a Second Amendment type of situation. They're totally toothless. So, they can do with them whatever they want. Now, what am I talking about? Well, first it was all of the restrictions where they basically turned them back into a prison colony. And maybe that's why they direct this stuff toward Australia first, because maybe they've got, some of that in their DNA. If you're from Australia, hey, weigh in. We do have subscribers in Australia. Let me know how you feel about this, what your view is. But the latest thing is they're removing financial infrastructure, consumer-based financial infrastructure from Australia. Now, what am I talking about? ATMs and bank branches. They are pushing Australia toward totally digitizing their banking system. And when you do that, we've been talking about it for a while, you make it much easier to control people, because if you restrict it's easier to restrict access to assets if they're just ones and zeros, okay? Really can't do much about someone keeping precious metals or even cash, okay, on their person or in their possession at a property they own or control. But when it comes to just a few keystrokes and being able to say, behave and we'll turn your cash flow back on, that's much easier to do in the environment that Australia is setting up. And guess what? It's spreading. Americans, you're next. The end of ATMs in Australia. Thousands of cash machines are removed across the country as banks go digital. Now check this out. This is a sub-headline. ATMs and bank branches across Australia are continuing to close at a rapid pace. Switch by customers to digital banking, seeing Big Four banks switch their focus. So they're trying to make it seem like, oh, this is what the people want. They want less customer service. They want less access to, a real person who can explain maybe what's going on with their account. They want less of an ability to actually take their card, put it in a machine, and get cash, okay? They're trying to convince you that the consumers want less of that. ANZ head of distribution, Kath Bray, said changes were a clear sign of the times. Now, Kath Bray is just a functionary. They don't know what's going on at the top. They're just following orders, and hopefully Kath Bray will still have access to his or her, money. Just play along, Kath. Don't get crazy. Told the company line. As Australian banks continue to focus on digital transactions for customers, ATMs and bank branches are disappearing across the country, according to new data. The analysis revealed close to 460 bank branches have shut down across the nation in recent years. Now remember, Australia is not the biggest country. It's its own continent, but a lot of it is desert and outback wilderness, where very, very sparsely populated. You wouldn't find a bank branch or an ATM anyway. So you take the parts that are populated and you say, wow, 460 bank branches gone in the last few years. That's a lot. That would be a lot here, okay? If you said 460 bank branches on the East Coast of America have closed, that would be significant. And dating back to 2020, approximately 3,800 previously active ATMs have been removed. All right? So in basically 2.5 years, roughly, 3,800 ATMs have just disappeared. And the reason, what that's going to precipitate is people having to do more transactions electronically. They're never going to see the fiat currency of Australia. They're never going to hold that. They're not going to control that. It's going to be out there in the ether. NSW alone, NSW is apparently a bank there, has 140 fewer in-store banks, and almost 300 suburbs don't have a singular ATM to withdraw cash. The better to control you with. Now, we are going to talk about, how to navigate this, because it is coming your way. Remember, the folks in charge got a taste of blood when they started to say, you do as you're told, and you can still have access to your money. It's the whole social credit system. China is the first country, they've really perfected it. China has it down to a science. Literally, jaywalking could detract points from your social credit score. Jobs are lost, business is impacted, and another local service disappears. The closures have hit hard in regional and rural areas, and for older citizens, of course, because older citizens have been inculcated in the ability to transact face-to-face at the bank branch, or even, deal with the ATMs. I remember vividly my grandmother used to stand on the steps of the bank branch. I forget the name of it. It was in Baltimore City. I was a child. And I would go up there with her on like once a month. And she would stand on the steps. They would open. Other people would also. And then people would go in and they would do their monthly banking or what have you. And it was directly with the bank. How many people do that anymore? My grandmother's generation is, long since gone. So we're seeing an evolution. But this evolution is not about convenience. It's about control. We look back at what happened in Australia, and they really swung for the fences in terms of putting people in designated areas and arresting you for stepping outside your door. Big time experimentation in human behavior and how the government could control it. And at the end of the day, I think they decided on, hey, look, just like you would do with an animal in the zoo, you use positive reinforcement and negative reinforcement. Food, okay? If you can't buy it and you can't eat and your kids are looking at you crazy, then that may cause you to get with the program. And that, in my opinion, is what this is all about. Now, Capital One, right here in America, Capital One banks are closing amid shift to digital banking. Joining the ranks of many other large banking institutions across the U.S., Capital One Financial Corporation has struggled since the onset of the pandemic. Why are Capital One banks closing in large numbers? Closing brick and mortar locations has been part of Capital One's solution. So they're saying, hey, look, this thing that happened, you all remember it? That's why we're closing these branches. And we know people are getting back to normal here, but it doesn't matter. We're still going to close. Now, another thing that benefits these banks in being able to close these physical brick and mortar locations is, of course, those are expensive to operate. You got the real estate. You got insurance, in just in case someone slips and falls. A lot of people come to a bank branch in any given day. You've got employees. You got gas and electric. You got all that stuff that is overhead. Banks, again, we always say, if you want to make money with a bank, don't put money in the bank. Invest with the bank. Okay, buy shares. Do your due diligence. This is not me telling you to go out and buy any particular bank stock. Or if you've got a business or trying to start a business, maybe you want to take a loan from that bank in order to, or a line of credit more appropriately. Again, a loan, you start paying interest on the whole amount immediately. A line of credit, you pay interest on what you use. But those are the two ways you make money with banks, not in their savings products and certainly not in their checking products. Now, you do need the ability to quickly move money from here to there pay bills, do things like that. So that's where a bank may serve a great purpose for you. But these Christmas Club accounts that people used to rely on and certificates of deposit, this is not for this audience, because I'm telling you right now, with inflation, real inflation at 16%, okay, yeah, core inflation at 7.9, that's still egregious. And if you look at the rate of interest that banks are paying on savings products, you're underwater. You're so far underwater. I mean, you're so far underwater that even if you start swimming for the surface right now, you're never going to make it. So the way to make money, the way banks make money, okay, is via fractional reserve lending. The Fed, the Federal Reserve Bank, says, okay, T-Bone National Bank of Maryland, you guys are now set up. We're going to give you a fractional reserve of 10 to 1. So basically, every time someone comes and puts $1,000 into T-Bone National, they're going to get, you, the bank, you're going to be able to lend out 10 times that. So for every $1,000 someone puts in, T-Bone National will be able to lend out 10,000. Now, to the person or persons who deposit the $1,000, we're going to right now give them 0.6%. And then when we issue a credit card to someone, T-Bone National credit card, we're going to charge them 12%. So we're going to make 11.5%, okay, because we paid the depositor 0.5%. So if we can, now a part of that money that we make is going to have to go to our overhead. But if we can eliminate a lot of that overhead and put some AI into the system and things like that, and eliminate as many human beings as possible, then our profit margin becomes a lot more satisfying. So that's what's going on here. Now, what can you do? What should you do? Well, quite frankly, you should always operate using your own bank. You have to set up your own bank. Now, your own bank is not going to it may not, depending on who you are, it may. But for most people, setting up your own bank will not be a substitute for dealing with a bank, okay? What I mean by setting up your own bank, you need to have some instruments in place that you can borrow from at a tax-advantaged way. In a tax-advantaged way, you need to be able to have that money growing in such a way that taxes are not affecting it. Now, the Fed is not going to come to you and say, hey, we're going to allow you to create money with the fractional reserve lending method. No one's going to do that with you. So you're going to have to look for other ways, and allowing your money to grow tax-free using IRS code 72E is going to help you, create money, basically, just like fractional reserve lending does for the banks. Also, it's going to allow you, 7702, IRS code 7702, it's going to allow you to access money tax-free. Now, a lot of people are going to say, 7702 and 72E, they're not that important. But then they'll compare it to a qualified account like, a 401k, for example, or a traditional IRA. Well, those vehicles have merit, but they operate differently. You do get a tax advantage in that it lowers your taxable income now. But for most of the history of the American income tax, the top tax rate has been well over 50%. And so right now, we're in an abnormally low period of income taxation. And we're spending money like it's going out of style. We just sent up the $1.5 trillion spending bill. That's going to definitely create the reality where taxes are higher in the future. So if I know that taxation is going to be higher in the future than it is now, with top rate is somewhere in the 30% range, mid 30% range, then I would like to put myself in a position where I don't have to worry about higher taxation later. Now, I'm not saying that you put these vehicles, 7702, 72E, I'm not saying you exclude everything else, but I am saying that you should start creating your own bank or refining the way that you get money working for you so that you can help shield it from taxation in the future as well as right now, because in the future taxes will be higher. Trust me on that. All right. That's just an economic fact. We see it occurring right now. That they haven't come to Congress and said, we're going to put this tax bill in. But what has happened is look at gas prices. Now, there's a federal gas tax of 18.4 cents per gallon. You've heard no one in the Biden administration say, hey, we're going to suspend that, help Americans out. Hey, we suspended the exports from Russia, so we're going to help the American people out and suspend our gas tax. You're not going to hear that because that gas tax, they want to continue to collect that even in these high fuel price environments. So you've got all kinds of taxes out there that you're hit with. The government's not going to retract any of those, even in these tough economic times for many. All right. So concentrate on building your own bank. And you can do that with a combination of things. Health savings accounts, insurance policies, precious metals, a little cash, actually. Okay. But be careful with cash because it's losing value precipitously. So enough cash such that, you don't have to worry about the local ATM being snatched away from you. You can still get your hands on some cash and you won't be put in a situation where you're reliant on electronic transactions that our governments of the world have shown a predilection toward interrupting if you don't play ball with what they want. This is all about financial independence. All right, guys, I'll talk to you soon. To learn more about how you can achieve financial independence, check out these videos we recently posted on the Money Changes Everything channel.